Everyone says high interest rates kill real estate. They're wrong. In reality, high rates have just eliminated your competition. While the masses are panicking, the smartest investors are finding deep equity deals that were impossible 2 years ago. I've spent years analyzing the BRRRR method: buy, rehab, rent, refinance, repeat. I've seen markets swing from booms to busts, and the pattern is always the same. The biggest wealth is built when the crowd is too afraid to move. Today, I'm showing you why a high-rate environment is actually a catalyst for scaling your portfolio. I'm going to walk you through a realistic case study on finding forced equity when financing costs are peaking. I'll show you how to use tools like Deal Machine to target the exact properties your competitors are ignoring. By the end of this video, you'll have a clear blueprint to scale your passive income rapidly, regardless of what the Fed does next. Let's dive in. Let's be honest. Most of you are terrified right now. You've seen the headlines. Rates are up. Borrowing is expensive. The easy money era. It's gone. You're probably telling yourself, I'll just wait until the Fed drops rates. But here is the cold, hard truth. Waiting is a losing game. While you're waiting, you're not building equity. You're not collecting cash flow. You're just standing still. And for those of you who are still hunting, it feels impossible. You find a property on the MLS. You run the numbers. The interest rate eats your profit alive. The math doesn't work. The margins are razor thin. It feels like the BRRRR method is dead. But here is the secret. The problem isn't the interest rate. The problem is that you're fighting for the same scraps as every other investor in your city. You're competing with hedge funds and deep-pocketed pros who have zero patience. If you keep playing the game by the old rules, waiting for the perfect listing to pop up, you will be priced out of your own market before the rates ever move. You don't need lower rates. You need a different way to find the deal. Here is the truth the gurus aren't telling you. High interest rates don't kill the BRRRR method. They actually supercharge it. Think about it. When rates are 3%, everyone and their cousin is trying to buy a rental. Bidding wars are rampant. You pay top dollar. Forced equity, non-existent. But when rates spike, the hobbyists vanish. The competition evaporates. This is where you win. Because while the crowd is panicking, you're hunting for forced equity. Let's break down the math. In a high-rate market, sellers are more desperate. They can't afford their own adjustable rates, or they're tired of managing a property that isn't appreciating rapidly. This is where you use Deal Machine. Instead of fighting over a polished listing on the MLS, you're using Deal Machine to find the ugly houses. The ones with overgrown lawns and peeling paint. These are the off-market gems where the equity is hidden. You send a targeted offer. You buy it deep, say 65% of the after-repair value. Because the seller is motivated and the competition is gone, you can negotiate a price that makes the high interest rate irrelevant during the buy phase. Now the rehab part. You aren't doing a luxury remodel. You're doing strategic upgrades. New flooring, neutral paint, updated fixtures. You're adding perceived value that far outweighs the cost of the materials. Here is the secret to scaling in 2026. You aren't marrying your initial loan. You're using a short-term bridge loan or hard money to acquire and fix. Once the property is renovated, you move to the refinance. Even if rates are still high, the forced equity you created during the buy and rehab phases allows you to pull your initial capital back out. If you bought a property for 100K, put 20K into it, and the new appraisal is 160K, you've just created 40K in wealth. You refi at 75% LTV, pull your seed money back, and move to the next deal. That is how you scale. You don't wait for rates to drop. You use the high rates to eliminate your competition, find deep equity with Deal Machine, and build a portfolio while everyone else is sitting on the sidelines. Now you can't find these forced equity deals by scrolling Zillow. Everyone is doing that. To actually scale in this market, you need a data advantage. That's where Deal Machine comes in. It lets you pinpoint motivated sellers and send direct mail before a property even hits the market. Pair that with PropStream for deep dive analytics on equity and liens. When you combine these two, you stop guessing and start calculating. I used this exact stack to find a distressed duplex last month. Bought it at 70% of ARV, forced $40,000 in equity, and refinanced it all out despite the rates. If you're ready to stop waiting for rates to drop and start building your portfolio now, check the links in the description for both PropStream and Deal Machine. Grab them today and go find your first deal.